The altcoin markets are waking up, and that means that the volatility is increasing, and that's why in this video we're going to be talking about trading the portfolio, because that's one of the most asked questions. How do you trade a portfolio during a bull cycle with a lot of volatility? And in this video we're going to talk about maximizing our returns, compounding, but also protecting our profits. So let's get started. Before we continue, I'd like to ask you for a favor, and that is to subscribe to this YouTube channel, because I'm sharing everything that I do on my journey, and it hasn't been easy. We have been going down with the altcoin portfolio, but we kept on delivering, and I think that we have been improving the journey overall, and we're going to be sharing way more content. But I've seen that more than 60% of the people that watch the videos haven't subscribed to this YouTube channel. And in order to keep on improving and to deep dive into the content, we need more subscribers, because then we can expand the channel. So I'd like to ask you to become a subscriber. It's completely free, and then we can keep on delivering the content. And having an altcoin portfolio is super tricky. It is the ultimate risk in that sense. And I think that it's going to increase even more. And before we're going to talk about how I'm trading and what key principles I have, we need to have some background information. And that is through looking at the data. And the data says the following. The monthly volatility on treasury bonds is between 1 to 2%. The monthly volatility on forex pairs, so let's say the US dollar versus euro, is between 1 to 2%. The monthly volatility of gold is around 4 to 6%. And the monthly volatility of Nvidia is around 7 to 8%. Why is that relevant? Well, I've got a visual here, and that is the volatility of Bitcoin. In this case, it's annualized, so we're going to recalculate that back towards monthly. But basically, the annualized volatility of Bitcoin is around 30%, and that has been way higher. Now, if we look at the volatility back towards a monthly data point, including what the normal average for annualized volatility is for Bitcoin, the annualized volatility is around 50 to 60%. Recalculating that towards monthly means 14 to 15%, which means that on a month, it's very normal for Bitcoin to go up and down by 14 to 15%. It's also even possible to go up or down by twice that. Chances are a little bit less, but that is way more than the most volatile asset in the stock market, Nvidia, and it's also triple as much for comparison with gold. And now if we start combining that with, for instance, an altcoin, then we can see that the average volatility for an altcoin is around 25% on a monthly basis. And if we use an example, then we can look at the chart of Optimism, which has been having monthly candles, and these are all monthly candles, of 120% up, and then 22% down, and then again 51% up, and then 24% down. So it's not weird to say that the volatility on a monthly basis is 25%, and if we say it's annualized, it's around 80%. So that means that if there is an occurrence where an altcoin is going up by 100% in a single month, then that is a outlier which we need to utilize and in which we need to be adaptive. And in that way, we're going to be looking at 3 key principles that I'll be applying in this in the trading of this altcoin portfolio. And in the sense of that, we have the altcoin portfolio that I've shared, and you can see that we are having 8 or 9 coins in the portfolio, and the portfolio is doing pretty okay. We are actually back up. The low was around 35k, so from that perspective we are up a lot. And we have been trading the altcoin in an active way, because trading the altcoin portfolio is necessary, as you can't invest into relatively small altcoins. We have been selling ENS, we have been buying Psy, I've been rotating between Omni, Peak and Wormhole. And recently I've been adding Woo to the trades, because I was looking for the strong narrative in exchanges, and I saw an opportunity of buying that asset to maximize my returns. And outside of that, the first key principle that I wanted to share with you is the fact that I do have these coins in my portfolio, but I also have a watch list of coins that I'm going to be looking at in order to get myself interested into those or to be aware of a new narrative that is waking up. And why is that? Well, if we look at the derivative vertical or the DEX vertical, we saw a big narrative occur from that one. And when Aster started to go up, which is the DEX that has been created by CC, we saw some other new DEXs waking up as well. We saw Hyperliquid go down, and we saw older DEXs and centralized exchanges that actually have a token also going up from that perspective. So for instance, one of our coins that was AEVO started to rally significantly based on the entire narrative and not on the project alone. So in that way, we need to be aware of the fact that if there is a big narrative waking up because one big coin is waking up, then if another coin is not moving along, there's a big mispricing gap, and either the first one needs to go down or the second one needs to rally. And in that case, we can start trading that actual narrative. And the same can be done the other way around. So for instance, if we believe that the entire narrative is dying and some coins are actually still up a lot, we might be looking at a potential short in that particular asset because we believe that it should be going down. So that brings me to the crucial part of building a watch list on the site to be aware of projects that could be going to be running. That's why we have also created a video with top 5 coins in there. And I keep on sharing those coins that are not in my portfolio, but that are on a watch list to potentially be added, because I think that there's always an opportunity cost. And if there's an opportunity cost that we can utilize by buying another project, then I think that is the way to go. And then we still have 2 more key principles that I'm going to be discussing with you. But in order to do that, we need to go towards the charts. So that is the next part. We recently hosted our very first crypto masterclass with OKX, and it was a huge success. We had over 100 people joining us in Amsterdam for me to talk 1 hour about crypto and trading, an AMA, and we had drinks and a chat at the end of the night. We had people driving in from Germany and we had people flying in from the UK. And to be honest, this was something that I really wanted to do for years. And I think that we're going to be doing more of those events in the future. And if you want to be part of those events and want to know it the first, make sure to sign up through OKX in the link in the description beneath. And then you'll be the first to receive updates on all of the upcoming events. The other 2 key principles are connected to the charts. And as you know, I am a fundamental investor, but I'm also a technical trader. And I think that being a technical trader is actually the way to go to compound your entire returns in your portfolio. In a sense that if you don't understand the chart, it will be very hard to understand where you should be buying a particular asset. The other way around, if you're too much focused on the chart, you'll probably be selling too early, or you're going to be saying no to the actual bottom. It is a balance in between. And in that fact, I think the second key principle is the fact that you should be aware that compounding your returns is way better than waiting for that one big hit. There's always the story of people that have been claiming that they got a 100x with their portfolio. Actually, I've been doing the exact same in the previous cycle. That's great, but that is not a skill. And I think that by having a great way of compounding your returns, taking profits, then putting it into another coin is going to yield you way more. And I've brought up an example in this case, which is WorldCoin, that has been breaking through the 20-week MA, and that was based on the treasury news that was going to be done on a Nasdaq-listed company integrating WorldCoin into it. And due to the fact that it broke through the 20-week MA, we've seen a run of 115%. That is great. And that also means that we're most likely going to be seeing it way more often on the charts in itself. And one of the examples is actually here, which is Wormhole, that has been starting to break through this 20-week MA and has also got a very big bullish divergence on the charts. It's actually way bigger than this small one over here. You can basically put it all the way from the low in July 2024. And as long as it stays above the 20-week MA, it's going to yield a substantial return. But as we've just seen with the Worldcoin, it doesn't go up all the time. So once it has a big breakout and it starts to create a gap between the MA and the current price, it's very normal to have a correction, and therefore it's very normal to start taking profits on those assets, because most of the time, especially in this part of the cycle, other altcoins aren't really moving as of yet, which means that we go from narrative to narrative and then the big guys start to come in. So if, for instance, Wormhole is going to make a big return and starts to go up, I can compound those returns because I'm going to be buying additional assets, which is in this case Optimism, that is still not breaking through the 20-week MA, as you can see here. And once it starts to break through it, then we can again do the exact same trick. And I think that you should always question yourself the fact, if Wormhole is going to double from here and it's doing it in a very vertical move, is it going to double again? Or am I able to generate a higher return being in another asset? And that is how most of the altcoin traders and investors navigate themselves through the markets. And that is how you can actually utilize and compound your return in the portfolio and in the markets in general, which I think is a super important one, where moving your assets around in the right strategy is the way to go. And that brings me to the final and most important principle of today, which is the fact that once it starts to go up, and that is going to be very soon, you need to be building up cash. Because if we look at the previous periods of investing into altcoins, the key problem was that we weren't flexible with the positions that we had. So by not being flexible, I wasn't able to buy the dip. I wasn't able to utilize all the opportunities that were given to me. I had to sell other assets to even risk more to be able to get a return, which means that if the markets are going to go up and almost all the assets are significantly away from the moving average, it means that I need to start building a technical position into cash, which means that by doing that, we can also compound our returns. And if we look at some of the charts from the previous cycle, one of the key principles is we need to stay above the 20-week MA all the time. As long as that is the case, and we saw it here with Chainlink that broke through that level in January of 2020 and continued to stay above it with the COVID crash in between, continued to stay above it, and then it started to break beneath it, which indicates that there's a bear market. But from there, it went from $2 all the way towards 52, which is a 25x for that particular asset. But you can see that in between, we have very harsh corrections taking place. And you can't even see the corrections that have been happening within a week, because those happen as well. We will be having a lot of flash crashes taking place in the markets. And in that way, if something starts to go up, as we can see here, as we have been seeing here, it quite usually comes back to the 20-week MA to find support again. And that's why, if you're looking at an asset, for instance, with Chainlink, if it is at $20 and you're selling a portion, then rebuying it back at $10 doubles your position. And then if that amount basically runs back up again, you generate an additional return while also locking in potential profits and saving yourself from going back on the water again. So the fact that the higher the altcoins go, the more you should be building a cash position to be aware of all the risks that are involved by having a position in the markets. And therefore, if we look at Wormhole again, we are currently seeing that it's breaking above the construction. It's breaking above the 20-week MA. But if we compare that towards the portfolio that we have, if it goes towards, let's say, 18 to 20 cents, and it's very far away from the MA, independent of my entire thesis of my expectations of the markets, I need to be aware of the fact that I'm taking a lot of risk by having the position entirely. And that's when I'm really happy to be scaling off to be putting it into another asset, or to be able to stay into cash to be buying the dip back again. I hope you have been enjoying this update. These are my very simple core principles that I'll be using in all the videos that I'm going to be making on the altcoin portfolio. And as I said, it's going to be extremely wild. We have seen some significant breakouts on the market. We've seen some very hard flushes already. It's a super volatile asset, which means that we need to be a little bit more active, because I don't believe that simply holding an altcoin portfolio and investing into those for the next 10 years is a way to go. So one of the key ones, the final one, being out of the markets by having cash, is a great way to reassess the entire strategy going into the next period. And I think it's the key lesson that I've learned from simply holding assets. I'd rather be locking in profits. I'd rather be camping into cash, just wait what the markets are going to bring, and then use that, well, to rebuild my position if there is going to be a big correction. And yes, there will be cases that I'll be out and the markets continue to rally, but I'm happy to be missing that, because by the next opportunity, I will outperform simply holding an asset. And I think that's a very solid and strong strategy. I hope you have been enjoying it. Make sure to subscribe to this YouTube channel. I'll see you on the next update. Ciao.